Hey traders and investors, it's Serge Berger here. Today I want to have a look at a trade and a trade idea for that matter that a lot of hedge funds that I speak with are actually in, and I want to throw a bit of a cautious word out there on this trade for the very simple reason that I think it's always important to look at things in multiple time frames and in relative terms as well. The trade, very simply, is Walmart versus Amazon.com. A lot of folks are structurally short Walmart versus long the stock of Amazon.com. The reason why is very simple. It's growth versus value or the lack thereof in Walmart. So the thesis is pretty simple. Amazon.com has continued to grow because it's got this big online presence, and this new type of company versus Walmart with all its brick and mortar stores is basically falling behind the curve. And if you look at this chart here, by the way, which is the which is the share price of Walmart divided by the share price of Amazon.com, you can see for the past, let's call it decade and a half, 15 years or so, this has been an absolute disaster in relative terms for Walmart, right? So Walmart has completely been decimated in relative terms versus the price of Amazon.com. If we now zoom in a little bit closer though on this chart, and this is where the cautiousness comes out in my part, in my part. I have to zoom in much more because it's been such a massive relative outperformance of Amazon.com versus Walmart. But if we finally get to it over the past few months, you can see that the price of Walmart, or this ratio in relative terms versus Amazon.com, has actually outperformed. So while I actually agree in general terms with this general thesis that Walmart's continue to underperform relative terms Amazon.com through, let's say, at least an intermediate term, maybe more of a long-term lens, the devil's in the details. And the details right now are showing that Walmart has been an outperformer versus Amazon.com. So when you hear of this trade out there, make sure you understand the time frame that you are playing in, because that can literally make or break the trade. Okay, so right now, in intermediate term perspective, Walmart is actually a relative outperformer versus Amazon.com. Let's look at these single names charts, and you see a little bit more what I mean. So if we look at the charts of Walmart, you can see over the past few months, this stock's been making a series of higher lows and higher highs. And just today, as I'm actually recording this, it's again trying to break past a line of resistance. This is in stark contrast to Amazon.com and many other FANG stocks, by the way, who've been making a series of lower highs and lower lows over the past couple of months. Now, again, to be clear, I am not against Amazon.com. I think it's a great company. It creates a great stock at some point in the future again. But right now, that relative strength that people are talking about Amazon.com versus Walmart simply isn't there. In fact, it's the opposite way around. And I actually think there's a case to be made where we see growth stocks underperform for a continued, couple of quarters or so, maybe more, versus value stocks. And Amazon.com is certainly a growth stock compared to Walmart, which is, again, like I said before, a little bit more of a value stock. So make sure you know what time frames you're playing in. And for what it's worth, I actually think for the near to medium term, the trade is probably going to favor being long Walmart versus being short Amazon.com as a theme, because of what I continue to think is going to be more market turmoil. So Walmart may be looked at a little bit more of a safe haven versus Amazon.com, which of course had a massive rally in 2015. So there you have it. That's my take on the Amazon.com versus Walmart hedge fund trade that's going on out there. Hope this helps. Please, guys, like this video. That's how I move up in the YouTube ranks, and subscribe to the channel. And I'll see you in the next video.